All right, Ken Orange Theory Trader back with a quick video on when should you reverse your bias for the candle range theory. So let's not waste time, get into it. There's lots of different models I have on this channel, and sometimes you'll have a bias based on one time frame and then it doesn't play out. So you may have to play with time frames to see if you may be trading against the trend. So here we go. This was a trade that I lost initially, then I managed to recoup my losses on pound Australian. So the first thing I noticed on this trade was that I was looking for this range right here, this daily range, to hold, this to be the manipulation, and I wanted to see a continuation. So this was Friday. The range candle was Thursday. Manipulation was Friday. I wanted to see expansion on Monday. But interestingly enough, this is what Monday did. This large red candle right here was Monday. And so today being Tuesday, I said, you know what? I wonder if I can still get a continuation because the low of Thursday is still holding. I still had a long bias based on this low. Okay, I hope you're still with me. All right, I was just counting on this candle range low to hold. All right, but as we see, it did not. It spiked. It went up a little bit when this candle opened. I'm on the daily chart here, and then just tanked. So let me show how I figured out that the price was just not going to go in my favor. First off, on the 5-minute chart here, let's see where we at. We're going to do the replay option a little bit to see. Yeah, okay. So there was a fair value gap right here. Again, this is 5-minute chart. So when we go forward a little bit, remember that fair value gaps typically show momentum being on your side. So on the open of the candle that you're trading, no matter the time frame, if you can get a fair value gap within the first hour or so, that's always a good sign to me. However, if fair value gaps start to disappear or start to get closed out as a result of price going against you, that could be a sign that you're on the wrong side of the trend. So I got in, I want to say around here somewhere. So let's just say I take a long entry right here. Okay, because I did see this fair value gap. I was thinking that, okay, there was momentum to the upside. So, you got one gap here, you got another gap here. The low of the day is holding, so it looks good. But when we go forward a few more candles, we see here the high of the day was formed right here. And then here's a fair value gap against me right here. This is at midnight, or a little after midnight, almost 1 in the morning. And then price continuing to drop. See how this red fair value gap held, and then it's coming back. Pretty much the last line of defense was this green fair value gap right here. So I noticed as price continued to drop right in there, I said, okay, it's definitely showing momentum to the downside now. So I went ahead and got out for a loss on that one. I lost that trade. So then I said, okay, well, is there a possibility that the trend could be short? Now, do you have to do this? No, of course you don't. Okay, but what I did was I went out to the 8-hour because by the end it was about 1 a.m. and 1 a.m. is one of the time frames that I trade on the 8-hour chart. So you get rid of the entry, you get rid of the fair value gap bottom because it was wrong. So then when I looked at the, let's see, the fair value gaps on, I think it was the daily. Let me double check this to be sure. Let me exit the replay. Yeah. On the daily chart, I noticed there was a protected swing, which was right here on the daily chart. So the moniker is, though, when in doubt, zoom out. If you're unsure, if you think you're not sure, look for the last protected swing off of a fair value gap. If you don't know what a protected swing is, look at the deep study video playlist. That'll explain that in detail. So this green candle pinned these two fair value gaps and closed inside of it, and then price closed below the open price of this green candle right here. So what that means is that as long as this high, even though it's all the way up here, but as long as this high is holding, we believe the trend to be down. Now, that doesn't mean we're still going to get a green candle every now and then, but for the most part, because this protected swing is holding up here, the trend is bearish, right? So when I figured that out, I said, okay, now let me go to see if I can get a 1 a.m. expansion candle on the 8-hour chart, which I did get. So I just reversed my bias, long story short. And what was the candle range theory pattern that played out? Let me get rid of these marked levels because we really don't need that. So in reversing the bias, I found that this was a high and this was a low in line with the trend from that protected swing. So because I'm still looking, remember, I'm still looking for candle range theory. It's just a matter of which time frame I want to trade. So in this case, it was a 9 a.m., 5 p.m., and then a 1 a.m. short. Now, I wish I would have got the best entry on this. I really didn't. I don't recall the time frame that I got, but this is consistent behavior in line with something that's going to go down instead of up. So that's what I did. I just zoomed out, basically, is what I'm saying. That's to make a long story short. If you see price going against you, what I'd recommend is starting with the daily chart and seeing if you can determine where's the last fair value gap protected swing, and seeing if you could be trading against trend, and then check possibly the 4 hour or 8 hour chart to see if you can find a candle range theory price action in line with that bias. So in this case, the open price for the 8 a.m. candle, not 1 a.m. candle, was here, right there. That's the open price. And I mean, really anywhere. I just, like I said, I don't really recall when I got in. I just remember that I took the entry and then I woke up and I was in profit. So I went ahead and got out. I didn't hold all the way to the bottom, but mainly I just noticed that because this fair value got formed off the high of the day, and then you see here how this fair value got formed and then it just rockets down. That's the price action that we like to see as a result of trading in line with trend. Fair value gaps that hold, and then how price reacts off of them when they form. So it's one thing for it to form, but it's another thing for them to hold and then repel price. So that's what we were looking at. So instead of being long for the day on GA, I had to get short, and then price played out. And that's another way you can recoup your losses. So like I said, checking the daily chart is a good way to see, okay, is it possible that I'm trading against the trend for this day? And if so, if you can find good candle range theory price action on be it the 4 hour or 8 hour, then try that, see how that works for you. But that's a case where you may want to see if you can reverse your bias to recoup a loss and just see how it will go. But I hope that video makes sense to you. If you have any questions or comments, you can definitely leave them in the comments. I will take a look at them and answer at my earliest convenience. But I appreciate you watching and have a great rest of your day. Take care.